If you're a landlord, you'll know that reviewing rent isn't always the easiest conversation to have. In fact, a lot of landlords just avoid it altogether, sometimes for years. And honestly, when I first started out, I was the same. It felt easier to leave things as they were, especially if you had good tenants who paid on time and looked after the property. At first, it seems like the smart thing to do. You reward loyalty, you avoid the risk and cost of finding new tenants, and everything just ticks along. But over time, I realised, and also many landlords we work with at Let Property have realised too, that putting off rent reviews can actually create bigger problems down the line. Leaving rents untouched for a year or two isn't a big issue. But fast forward 5, 6 or even 7 years, especially with how fast the market's moved recently, and you could find that the rent you're charging is way below what the market would support. I've seen situations where tenants are paying 30% or even 40% less than the going rate. And by that point, even if you wanted to catch up, the gap is so big that it becomes impractical, or worse, it risks losing a great tenant. And no landlord wants to be in that position, especially now when mortgage costs have jumped so much. Many landlords have realised their costs have gone up sharply, but their rental income hasn't kept pace. And by the time they spot the gap, it's too late to easily fix it. But here's the thing that's not talked about enough. Leaving rents frozen for years doesn't even help the tenants in the long run. When rent doesn't move forward for a long time, tenants start treating it like a fixed item in their budget, something that will always stay the same. Then when something finally changes, maybe a rent review, or maybe they need to move, the reality of the market prices hits them hard. They realise that just getting something similar will cost significantly more, and it comes as a huge shock. It's far better to have smaller, manageable adjustments over time so tenants can adapt gradually instead of being hit with one big painful jump all at once. And here's another important point, especially if you're thinking about the future. Keeping your rents up to date isn't just good for your cash flow today, it's critical if you ever decide to sell your property with the tenant still in place. When investors are looking to buy, one of the first things they look at is the yield, the return they'll get based on the rent and the purchase price. If your rent is miles below market rate, the property looks less attractive. But if the rent is where it should be, regularly reviewed and in line with the market, it becomes a much more appealing investment. A healthy, strong yield often means you'll sell faster and for a higher price because the next buyer knows they're getting reliable, immediate cash flow. So, by keeping your rents aligned with the market, you're not just protecting your income, you're protecting and even enhancing the future value of your asset. At Let Property, we always recommend carrying out annual rent reviews. That doesn't mean putting up the rent automatically every year. Not at all. It means benchmarking your property, checking what similar properties are renting for, seeing if there's been a genuine change, and then making fair, reasonable adjustments if needed. Sometimes rents stay flat, and that's fine. Other times, the market moves, and it's sensible to make a small adjustment, one that's fair and keeps your tenants still feeling they're getting a good deal. It's about creating a real win-win. The tenants stay because they know that they're still getting value and are happy where they are, and you protect and even grow the value of your investment for the future. And if you're thinking about selling your tenanted property, Let Property can help. We specialise in selling investment properties with tenants in place, meaning you can maximise the price you achieve without having to evict great tenants or leave the property sitting empty. If you'd like a free tenanted valuation or just some advice on your opinions, click the link below and speak to one of our team. Don't forget to like, subscribe and comment below.